What is up, YouTube? It's your boy Johnny A, and I'm back at you guys with another video today. Hope you guys are all doing good on this Thursday. So today I wanted to go over a question I was asked in the comments on yesterday's I'm not too sure if it was yesterday's video or it was a video I made a couple of days ago. So I wanted to answer this. I am not a financial advisor. Please do your own research before investing into any stock or crypto, but I could definitely try my best to answer the question and help anyone who's a little confused or maybe may need some guidance. I'll definitely try my best here. But this was a great question by Sean, Pias7847. Hope I'm saying the name right. But he asked, as a newcomer to dividend investing, what do you recommend our safe starter dividend investments? So you guys know that I have a whole bunch of dividend stocks in my portfolio, but we're going to start off with what I would buy as a new dividend investor. Now, I wouldn't start off with the high yield dividend stocks that I have in my portfolio just yet. Obviously, I have a good amount of money into all of them, but you guys can see in my portfolio, I have a little bit of high yield. I have a little bit of the safer high yield ones like JEPI and JEPQ. And I also have REITs, which you guys see in Realty Income, AGNC, Stag, Main. I got PSEC, Gain, and I got growth stocks with the VOO and SCHD. So, first and foremost, when it comes to dividend investing, you guys gotta be consistent with reinvesting dividends back into the portfolio. That's number one. You can't be afraid to lose money. You can't just be, only happy when you see green days. You got to take advantage of the pullbacks as well. So the first stock I would definitely get in if I was a dividend investor would be SCHD. And the reason why, because SCHD is a dividend equity ETF. It holds the top companies in the US in this ETF, and it basically pays out a dividend every 3 months, which is pretty decent. And it also has some growth. You guys can see SCHD, the max, all time, it's been up $56, 226%. The 5-year, you can see it's up 56% in the past 5 years. And you can see the holdings that it has. It has great companies like AbbVie, BlackRock, Coca-Cola, Texas Instruments, Pepsi, Home Depot, Lockheed. These are all great companies that pay out a dividend. This would be the first stock I would get to start off dividend investing. It pays out every 3 months. That's the only difference, all right? This is definitely one stock I would get in if I was a new dividend investor, SCHD. And then I would add a little bit of growth, which I already have in my portfolio with the VOO. Some people like VTI. Some people like the other, I think it's SPLG, which is another Schwab stock. I think that's what it is. Let me just double check. SPLG stock. I believe this is it. I could be wrong. I know there's another Schwab stock that's pretty good, but the ones I'm familiar with are VOO, which is what I have. The Vanguard S&P 500, which holds the top 500 companies in the US. And there's another one called VTI, which is kind of similar. Your total market index fund. It's been another great stock to hold for the long term and for growth. But I like the VOO. That's one I would definitely get into. I would add that specifically just for growth in your portfolio. The great thing about the VOO is that it pays out a dividend every 3 months, just like SCHD. Okay, so those are the two stocks I would definitely start off with. Like I said, the great thing with Robinhood, you could just invest $1, $2. That's the great thing I love about Robinhood. And I'm pretty sure other brokerage apps do the same thing now. But Robinhood is just more, in my opinion, more user-friendly, especially for beginners. So the VOO, SCHD are the two stocks I would start on my dividend investment and growth journey, because you want to diversify and have a little bit of everything. Some people might just like growth stocks. Some people just might like high yield or REITs. Everyone is different, but this is what I would do for a beginner. So those are the two ones I would add to the portfolio. And then I would start off with REITs after that. I would probably add Realty Income, which has been doing great the past 5 years. Well, here it's down $10. But all time, if we go to max, you can see it's up 469%. Max time of $49.25. And the great thing about Realty Income is that they tend to increase their dividends almost every single year, and they have a great record of doing that. So you guys can see this play for me has been paying off since I've been invested in it. I'm up $538, and I'm always buying little amounts each and every single time. So you got to keep adding money. You got to reinvest the dividends, or you could use the dividends to buy more of the VOO, SCHD, or whatever the case may be. I would definitely have Realty Income in there. And then another one I would add would be Stag Industrial. I believe this is another REIT, which I have. And they're up as well, 211% all time. I would also add ADC. It has another great max time. You can see up 416% since inception. These would be the top three I would get into. Realty Income, Stag, and Main Street Capital definitely would be another one. So I'll be the 4 REITs I would get into if I was a new dividend investor. The great thing about Main Street Capital, Realty Income, ADC, and Stag Industrial, they pay a dividend every single month. So you have that passive income coming every single month. Okay, so Main Street Capital will be another great one. Now, in total, those would be, what did I put around, that's 2, 3, 4, 5, 6 stocks that I've recommended so far. So I said growth, dividend, and REITs. And if you wanted to, after that, you could add in the high yield ones. So maybe I would start off with, I would honestly go on the safer side. I would go with YMAX and YMAG. And the reason why is because YMAX actually holds all of the high yield ones, high yield ETFs in one. So it's kind of like the VOO, but it holds only the high yield income option income ETFs in one, which you guys can see here on Robinhood. Their top 10 holdings are PayPal, Meta, XOM, Netflix, JP Morgan, Apple, Snow, Microsoft, Amazon. So it has a little bit of everything. So YMAX would be another one I would definitely invest into. And then YMAG, which is the Magnificent Seven Fund, which has the top 7 ETFs, Meta, Apple, Microsoft, Amazon, Nvidia, Google, and Tesla. So these 2 funds are more diverse, and they pay out a great distribution every single month. Keep in mind, these 2 right here are the more higher riskier ones. But if you want that dividend income, these will definitely be the 2 I would recommend. I know I have other ones like MSTY, Coney, and IWMY, but those are more on the way. In my opinion, they're more risky than YMAX and YMAG because you're only relying on one of the underlying stocks. So like MSTY, you're relying on MicroStrategy. When it comes to Coney, you're relying on the Coinbase stock. So that fluctuates a lot as well. But YMAX and YMAG just give you that diversity into all of the funds. So that's what you want. And then to be as well on the safer side when it comes to high yield dividend, I would definitely get JEPI. JEPI has been proven to have a great long-term uptrend. I mean, it's been pretty stable. It pays a pretty decent dividend every single month. And I would also get into JEPQ. JEPQ has been doing well. Max time up $3, 6%. I mean, it's nothing great like the VOO or SCHD or Main Street or Realty Income. And the main reason is because these are for income purposes only. But, they've been pretty stable. So I would definitely get into JEPQ, JEPI, YMAX, and YMAG would definitely be in there as well. So I gave you guys 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stocks that I would start off with. You could dollar cost average into all of these, and you'll definitely, in my opinion, will be on the safe side of things. You got the growth, you got the dividends, you got high risk ones but are pretty stable, And you can you got to reinvest the dividends, play around with it, throw money back into the VOO, SCHD, whatever you guys want. That's what I would definitely do, in my opinion. So like I said, this is not financial advice, but that was a great question. As you get familiar with the high yield ones and you're getting more dividends, and as well with the REITs, you can start adding more plays if you feel more comfortable. Maybe like a Coca-Cola. You could try more of the high yield ones, like MSTY, which has been paying out a great dividend. But keep in mind of the risks that come with the high yield dividend stocks. If you want to be more on the safer side, look at other companies, like I said, like Home Depot, Coca-Cola, Pepsi, all these other well-known companies that pay a dividend every 3 months are more on the safer side of things. So that's something you would have to research on your own. So that was a great question. I appreciate the question. If any of you have any questions that I could try to answer, I'll definitely include them in the video. And I hope that helps anybody out there that's watching the video. And that's basically all I have for you guys today. The portfolio still stands at 50K. And I've been, dollar cost averaging and trying to build up my passive income each and every single month. So if you guys are new to the channel, make sure you hit that subscribe button. If you guys have any more questions, like I said, leave them in the comments below. You can follow me on Instagram, on TikTok as well. I appreciate all of you for tuning in, and I will see you guys on the next video. Peace.